Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show. We will look at what happened in the market during the day, learn something from it, and plan for a better trade for the next day. So, we had a flat close, observed flat close on both indices, and we have a monthly expiry, the last expiry of the year. We are at a resistance as exactly as it was yesterday, and we're at the markets are at make or break zone. Let's get into the charts directly and try to understand more. So that's a candle, an inverted hammer, almost an inverted hammer. The big size is a little less, but selling pressure is evident from the big size. Banknifty also an inverted hammer, a better inverted hammer of the Banknifty, right? So the close was flat, actually slightly less than yesterday's close, and that's what same in the Banknifty also. So some weakness has come in today. Flat expiry, flat close before an expiry actually, right? So let's quickly see the charts in another way. We had been talking about a resistance zone where it closed yesterday. We're exactly the same, below the 50 DEMA on the Nifty, and the Banknifty exactly hit the resistance there below the 20 DEMA exponential moving average. So we are at a resistance. It did attempt intraday. If you see the 15 minutes charts on Nifty and Banknifty, you can see that it initially dipped less than 0.5%, and then it was trending up most of the day, and then it reversed from there downside. That's exactly what happened. Shorter time frames, if you see 28, this is exactly what happened. It dipped, then moved up, but then fell under selling pressure from the resistance zone. I have to also say the opening dip was there, then it moved up. So you can say it is a V-shaped reversal that happened, right? In general, right? So, but there was the initial dip and the move up and the reversal, finally ending flat. That's what applies. So, change in polarity can be seen on the weekly charts of both Nifty and Banknifty. This is the same resistance zone from where it had broken out. Now that is acting as a support and confluence with Fibonacci and the moving average. Same Banknifty also, and beautiful CIP bounce is what probably may be happening. You'll get confirmation about that only on Friday because it's a weekly chart. So that's a very beautiful support bounce that we may expect. If that is the case, then fine. It all depends on what's going to happen on the last trading day of this year. So market in the short term, daily charts are at resistance for sure, no doubt about that, and both are on resistance. And if you look at the daily charts and Bollinger Bands, then we have the same story as yesterday, where the bank index is consolidating, contraction, sideways movement is there. Nifty, it is towards the sideways movement, but the expansion is still there. So slight weakness towards the bearish side. Expansion continues to be there, but both the Bollinger Bands are indicating bearish bias because it's less than the 22 moving average on the daily charts. So Bollinger Bands are showing mixed picture. Sideways, two bearish moves on the Banknifty and the Nifty respectively. So lower low on the hourly charts is what we were talking about yesterday, and it happened exactly the same. Look at the hourly charts of Nifty. We had drawn a trend line, it hit there, bounced down, hit there, reversal. So there is a chance that it can dip towards the 18,000 kind of levels tomorrow, if in case it doesn't gap up in the morning. and same Banknifty also. This is hourly charts with Banknifty, where we can see clearly the resistance. Yeah. Resistance support levels can be seen for the Nifty and the Banknifty at more or less the same levels: 18,262, 18,440 to 400. Before that, you have 18,300, 350. That's also a major resistance. So 260 to 300, that zones up to 350, and then 400. This 400, 442 is acting as Fibonacci 38 resistance also. Retracement levels. Supports downside is 18,071, 18,000 rounding number, then 17,950, that zones. The final support would be at 7,800. Right. Overall, that is a confluence of previous swing lows and Fibonacci 50 retracement where it had taken the previous swing lows earlier. Banknifty 42,961 upside, 43,000. That big bullish resistance to the upside, and after that 43,339. Downside supports will be 42,560. This is Fibonacci 23 retracement, and as well as 42,231 after that. If it breaks that, that's support zones. Bollinger Bands, we have seen that what it indicates momentum is in the bear zones, and it was flat on both indices. Trend in the bear zones, but it is having falling strength. It is having falling strength on the Banknifty. That means the bearish is not that great. Banknifty is more strong as compared to the Nifty, right? That's it. So India weeks, nothing much happened. That also had a flat close 15.39. Futures OI short build up negative. The options OI is showing a level of just 200 points, 18,000, 18,200 for the monthly expiry tomorrow. 43,000, 1,000 points. Small volatility seen there on the Banknifty. So the highest put and call writing is seen for the December 29 tomorrow, Thursday, monthly expiry for the December last monthly expiry. PCR is bullish 1.07 and 1.17 is bullish. So bullish put call ratio. Narrow range Nifty option OI levels, futures bearish build up today. Net resistance market, sideways market, flat momentum, sideways price action at support, at resistance, at support, bounce in progress, and at resistance. Basically, that's a summary. And sectors, if you see the auto and realty of the two sectors at close green, it's less than 1% of up more has happened, less than nearly 0.5% in realty sector is close green. Only two sectors close, and all other sectors are red and close less than 50% are flat. Right. Basically, all the sectors are not now the sideways, and none of them are in the bearish zones of the momentum perspective in the short-term charts. Heavyweights, all heavyweights are closing flat, less than 0.40, 0.30%. So very flattish day for all. But for looking ahead, the Kodak banks only the one that has got momentum in the bearish zones continuing. Not a climbed. Others are all climbed in the sideways zones. Institutions are actually selling. Fyers have been selling the same, but not in big quantity. But selling is continuing today also 872, and AS also did not buy much. That's why market closed flat. Retailers are betting for tomorrow. 374 buying, core buying in the cash market for DIs. So the entire December DIs has been buying, but the Fyers has been mixed bag. Not selling too big. Well, last week also they were actually not selling too much. So this is the fourth continuous day of selling for the Fyers. A little bit of concern of institutional participation, lack of volumes, people on vacations and all that in the December month, year end and month as well. Right. So crude oil is less than 80, maintaining that level, sideways momentum. It's spiking up because of some Russia news or something. There's likely that it can go up the parallel channel. So that's worry. Dollar has is staying flat and consolidating at 104 levels. Flat red is seen as of now with bearish momentum on the short-term charts. The rupee is not going down. It's still at 82.376, very close to the 83 and the all-time high level. So rupee is weak is a concern. With dollar also weak, dollar also rising, crude oil also rising up, and rupee also weak, means we have trouble. All this consolidating after 11% jump up. It's falling as of now and at resistance basically. Brokerage is seeing some 850 plus levels green as of now, time recording. US market also seeing some rising greens, but 100 points plus greens in futures and all that. We'll have to see that only after the trading is completed tomorrow morning pre-market. Only then we'll get a picture. But we know what the US market is doing. It is in a descending wedge, attempting to stay from reversing down, further falling below towards the support zone. Nasdaq is weak. S&P 500 is weak. Dow Jones also struggling to stay afloat. Right. Even after the first trading, after the holidays yesterday was showing red, but it recovered something. Tomorrow we'll have to see. So you have to keep a close watch on this US indices in the pre-market. Big moves are there, then none of the analysis works out. We could reflect more of the global cues. Right. Major events, US jobless data is coming tomorrow. So some volatility can be expected day after tomorrow. Stock picks, General Steel sector and metal sector itself is shining. General Steel is a long and Crompton Greece is a short. Let's quickly see. General Steel, it's an all-time high, I believe. It's a rounding pattern, breakout. Solid candle was yesterday, 6% or something. Index itself moved. And it's an all-time high. So if the price moves above today's candle's high, then there may be an entry with the stop loss at this neckline of the entry candle's low. Because the momentum, medium term and short term both have climbed to the bullish zones, and the trend indicator ADX also is in the bullish zones. It's a long call on General Steel. Crompton Greaves is in the short call. Right? It's a short because if you see the weekly, it will be more clear. It's having a potential head and shoulder takedown that could happen. See, if you get there's no confirmation yet. If this price is moving below this neckline, candle's low, then you can make an entry with a stop loss above the candle above the neckline. Because it's a short call, because it is the medium term and the short term, both momentum and the trend are the bear zones. So there could be a potential for a short swing trades on this. Right, Crompton Greaves short, Jindal Steel long. So let's wind up our analysis and come to a conclusion. Today, what was it? The day was actually hitting the resistance and then unable to move up, and I'm finally closing flat. That's what happened yesterday. But we know that on a weekly basis we had taken a support at a major support zone, crucial support zones from where we had earlier broken out and then made all-time high. So we are at that place. The week is still mini day, so weekly candle we cannot rely on. If we sustain this or fall back into that wedge, or fall back into that below that trend line, that's what we have to look at. But yesterday was a strong bounce. Day for yesterday also strong bounce. Today was kind of flat. Everything in indicators looking flat sideways movement with lack of volumes, momentum, and all of that. So slight mild bearishness is my view for tomorrow also. Tomorrow is an expiry, so a lot of volatility can be there. While it moves towards 18,000 or below, and while it moves towards 18,300 and above, all that could happen. Monthly expiries are usually more volatile than weekly, especially the last month of the year. So volatility can be expected. So make a note of that. My view as of now is 18,000 and 18,300 may be the levels to watch for the expiry. 42,500 and 43,000 may be the level for watch for the Banknifty. Week has cooled off, but it is spiking 15% last week, so you have to be cautious on the main voting nature of that. Overall, the medium term 17,800 and 18,300 and 41,500 and 43 is the levels to watch on the upper side and the long side for the Nifty and the Banknifty both. Right. So always protect your capital. That's what you can do. Manage your risk, position size properly. Which is spiking by about 20. Stay out of the trade or cut short your position size. Always use hedge strategies overnight. Use option strategies for protecting from random incomes from the option strategies like cover calls and all that. There are videos available in the playlist. Check out that. And so that's how you have to play the game. So safe trading. And my view is mild bearish. So your view could differ, but I hope this analysis of the different aspects of the market and the study might have helped in some way to make a better trade plan. So it has, then definitely consider hitting the like button, share to maximum, subscribe if you are not subscribed, and then thanks for watching. Happy trading, happy learning, happy investing. Bye bye.